Good evening. Ira Epstein with your financial market wrap-up, and this wrap-up is for the evening as we're here now on the 15th of December, 2022, about 4:35 p.m. I almost said a.m. there, p.m. Central Time. Let's label today Demand Destruction Day. 4 banks get together. European Central Bank, Bank of England, Swiss National Bank, and the Norges Bank. And what do they all do? They raise interest rates. Same thing. They've got to destroy demand. The markets all think, same picture that the Fed picks, that labor markets are in good shape. They can afford to see demand destruction by raising interest rates. Yes, unemployment will go up a bit, but manageable. That is the goal of the central bankers. And when all of them came together today doing the same thing, it was too much for the market. Now, there was good news, because if you looked at the Philly Fed and you looked at the New York areas, you saw they came out with their numbers and they are weakening. You're seeing that. But you had a bad number, and that was in unemployment claims. Instead of going up as the Fed wants to see, they fell 20,000. This isn't the direction it's supposed to go. And the continuing claims went up a measly 1,000. The employment market, the labor part is too strong. So let's call this demand destruction, and that's what you did. You drove the dollar higher, which in turn broke markets priced in dollars. You broke the stock markets because the enemy's all the central banks, and we're looking at the creation of a worldwide recession. You took the energy markets down because China hasn't really reopened, and what opening they're doing, they're going to be pushed back with COVID. So it's a question of when they're going to have that demand for that energy. It's a bit too soon. Bonds and notes got a relief bid. If everything's panicked and down, you want to park your money, and that's what people did. That's how I'm viewing what happened today. When we take a look at the S&P now for the week, it's given up everything, and it's actually down a percentage point. But on a weekly chart, it just returned to what I call the line in the sand, that 18-day average, and holding it. You broke the back of this market. You were trying the upside. Remember the other day when we jumped and went crazy to the upside? We came back into that. Now you've done the opposite to the downside. So what's good for the goose is good for the gander, right? Are we in a trend? You are not. You're in a mishmash, as I want to call it right here. You've cut through all these moving averages now. You have a bias to the downside, but you're at the lower Bollinger Band. Don't you get amazed with how the market stops on the rallies at the upper band and at the lower band and stays within that more times than not? If you're not amazed at it, shame on you. Learn about that. And you're oversold. So do I think the market from here is just going to crater? No, I don't. Nor am I bullish. I think the market's done its damage, and tomorrow might be the day where we all go, let me alone. That could be the kind of trading day it is. The NASDAQ, the same thing. The challenges of the 100, the upper Bollinger Band, and today, right to the band, and you stop there magically again. You stopped there in the Dow. You went to the top part, you went to the down. You're oversold. It doesn't mean you can't go lower, but the odds don't favor that you're going to stay under that band very long. That's the point. That's not a bull sign. You could always develop embedded readings, but you haven't even begun that process. The Russell joined in and paid very good attention to the Bollinger Band again. So I'm content with what I'm saying. You're void of a trend. You've ended that rally phase at this point. That does not mean you won't get your Santa Claus rally. Let this work its way out. You have 3 Fed members speaking tomorrow. So we're going to start hearing the first talk, and Ms. Meister is speaking as well. So she's always got something very good to say. Let's hear what they all have to say. And do they calm the market down, or do they say, no, we're going for that? And that's what I expect them to say. They're there to beat this beast back into its bottle called inflation. When we look at the VIX, you got up here to the 200-day average right here, the 100. And you're right back to neutrality, the 18-day average of closes. When we look at the T-bond market, you're overbought, not embedded, getting a relief bid. I don't know that this is going to be able to carry or not. I wouldn't fight it. If you embed, I get even more bullish, but I think you're getting a little bit ahead of yourself. The same thing in the 10-year note. I'm looking for the failure zone where it's been. So between here and the 200-day average, I don't think it's going anywhere. When we come to the dollar index, you had gotten down for the past 2 sessions, not including today, hit the Bollinger Band, oversold. I said I think the shorts are going to cover. I think they covered. Now, are they going to resell? Well, 105.34 is an important number for resistance, but the last rally high was 105.23.5. So if it goes to the sell zone, I don't want to own it on the short side just yet. I think it's you walk away from this market just temporarily. And that means in the euro, you could slip back. And in the euro, as you take a look at the market, did it embed? Very important to take a look at this. And I'll show you a couple of things with it. So the answer is both numbers today were over the 80 level. Yesterday, they're over the 80 level. Day before, they're over the 80 level. And the day before, you came in embedded. And the market got down today, made a higher high first and broke. Now, it didn't close at the very low of the day. Tomorrow's the key day. I predict that when you reopen, you'll probably, if you open steadier and lower, you're going to lose the embedded reading, the way the math should work. But that doesn't mean you fall apart. Then you have the day to come back and try to gain it back. It's an interesting day tomorrow. I'll be discussing it in my morning subscriber video in detail. That's the subscriber one, not the free one where I just do what the day's news is. In the British pound, you tell me what you failed against. The Bollinger Band. You lost your embedded reading. You're due to go back to the 18-day average. And for all purposes, you're 5 points away from it at today's low. In Bitcoin, again, I think that you've got pretty big resistance here. I think that you're going to have a hard time getting through these lows, and I said this yesterday, unless you get some other event. I've heard nothing about another event. So I think it's consolidating itself at this point, watching what goes on with the events with SBF as he tries to fight extradition, which he'll fail on. Lower highs, lower lows, you can see in the energy. All you did is rally back to the 18-day average. So what would happen here normally is the pros would sell under today's low with the stop back over the high if you weren't in oversold territory. You are. Any reading under 30 is oversold the way I teach in my full charting course. So I don't see anything quite there I want. The story in WTI, a little different. You're not oversold. So I think that if you get under today's low, I think the market will see the short sellers show up. I think they'll have stops over today's high. If they close back over the high, I think they'll get long. I know that sounds crazy, but that's what I expect. So I'm looking for tomorrow to be the sell day by the pros in the market. I don't think they'll do anything in heating oil as you have a lower and low, higher high. I think you're going to fail on the rally now at the 200 and the 100-day average of closes. I think you've gone up enough to give something back. And in nat gas, you're just stuck at the 18-day average. I don't think you're going anywhere in that for quite a while. So back and forth action. You heard me mention to you my morning video. Folks, this is where the nuts and bolts come together of everything. Why? Because at 5:30 in the morning, I'm first start off by telling you what went on in Asia, Europe. Are there big reports coming out? We discuss what the market's looking for. Then we go into the chart action. Remember, by 5:30 in the morning, the markets are open already. U.S. time, they open at 5 p.m. at night. So we've got a lot of the trading, and now the trade flows coming back in from Europe, from the East Coast, and right into the Midwest. The volumes are there. We'll look at the daily charts, the weeklies. We'll come up with trades. We'll come up with ideas for stops, where to take profits, back and forth. The video will play on the free app that we give you for your phone. It also has charts, quotes, news, everything in it. You can view it on the website. That's where I prefer you do it. I use the phone to send you the email message and a text message. You can opt out of the text at any point, by the way. Just write stop at that point. A lot of people like the text, though, I will tell you. And then you can also go to our website and under research, actually under your member login, it's there. So, but how do you find out about this and give it a try? Because you should. Go to our website. Go under the word research, read about it there, see if this fits you. It's really that simple. If it is, give yourself a try. It's $7.95 for 24 videos, each approximately 18 minutes long. You're not going to get a deal like that anywhere else. And on the weekend, included in that, you're getting the weekend charts. And sometimes during the day, I go to prove a trade. I'll look at the weekly and the daily to give you an idea. How do you get it? I just gave it to you. Also, you can move your cursor at the top of this at any point. You'll see an icon. Give it a click. It'll take you where you have to go. I'm Ira Epstein. Have a great day.